Hey everybody, welcome back to Trades and Gains. I'm your host, Max Pitts, and it's June 10th, and big money is doing backflips in the options market today. You're watching the midday options update where we cut through the noise and show you exactly what the institutions are betting on. Let's talk flows, not headlines, not hopium, real prints, real capital, real risk. Let's get right into it. So big tech is back on the menu, and no, we're not talking about another Apple headset. We're talking about $1 million option sweeps flying on names like NVDA, Google, and Microsoft. Now with NVIDIA, we have seen three prints spotted. $60 puts, ironically enough, for 12/17/2027, $2.91 million in premiums, and giving them about 7,000 contracts. We saw $140 puts as well, $2.5 million spent in that premium with about 2,400 contracts, and that's expiring for September of the 19th of 2025. But on the flip side, we saw 1.05 million go into 145 calls expiring for July 18th of 2025. The $60 puts are a long-dated doomsday bet. That's December of 2027. Someone thinks AI isn't just overpriced, it's due for a total collapse. But wait, we've also got bullish 145 calls in July. Short-term hot money is chasing the upside into earnings, maybe? Now, another big playa in the tech game is Microsoft. We saw 470 puts expiring for January 16th of 2026, 2.99 million spent in premiums with a 23% IV rating. Strike is deep in the money. This Microsoft flow feels hedgy. 3 million on low IV with a deep in the money put. This could be institutional protection against a soft guide. Google, we saw 5 back-to-back call sweeps come in at one point today. Yeah, 190 calls expiring 12/19 of 2025, 14 million in total premiums. Identical strike and time, and all the sweeps are speedy hands. This is not a hedge, this is a setup. The speed of these sweeps means somebody knows something or they're trying to bait liquidity before a run. Now, if you're seeing gold and JP Morgan pop up on the same tape, congratulations. That's called institutional paranoia. Let's go ahead and take a look at it. Why don't we? JPM puts, we saw 240 strike expiring for January 15th of 2027. 1.75 million dropped in a premium with 27% IV, but at the 260-year hedge. This is a deep protection play. Long dated, sizable, and right on the edge of key support zones. Could this be someone hedging financial contagion or just a well-positioned macro short? GLD calls, we saw the 308 calls expiring for September 19th of 2025, 2.09 million in premiums, IV sitting at 18%, bought at the $307.05 mark. Gold GLD buyers are not dumb money. 2 million on 3-month calls suggests someone's bracing for more Fed dovishness or geopolitical escalation. Watch the yields in this case. Now let's talk about some commodities and left field names as well. It's not just tech and banks. Commodities and random tickers like SLV, IBIT, and VG are also seeing action. Let's go rogue here. SLV calls, we're seeing the $32 strike expiring on August 15th of 2025. 4.7 million in premiums, 11,000 contracts with IV sitting at 25%. That's a chunky silver bet. 4 million is telling us that someone's worried about inflation reigniting or a soft landing turning into stagflation. With IBIT calls, think Bitcoin ETF here, $64 strike expiring on July 18th of 2025, 2.99 million in premiums, with the IV sitting at 44%. The spot this was bought at was 62.07, and Bitcoin options flow is picking up again. With the halving priced in, this feels like an institutional short-term rally bet or front-running ETF news. VG calls, Victory Capital, small but aggressive sweeps, 74.75K. IV is sitting at 69%. Volumes at 1.495K. Low cap, high conviction, high IV. If you're degenerate enough, you're watching this one for sure, boys. So what is this going to tell all of us? Let's go ahead and read the tea leaves here for all you hippies. It's not random. These are macro moves being made in microstructure. Themes that are emerging today: volatility is returning. IVs are picking up in NVDA, Google, and VG. Hedge plays are in. Microsoft puts, JP Morgan puts, GLD calls. Tech optimism is short term. Sweeps in Google and NVIDIA showed us exactly that. Commodities rotation: gold, silver, uranium, and crypto derivatives are all starting to catch the flow. This is a classic cross-asset hedging behavior. The bond market isn't buying this rally. The options market right down the middle. That's where the money's made. Let's run back the biggest dollar prints of the session so far. Google calls 5 times sweeps, 14 million in total. GLD calls, we saw 2.09 million. SLV calls at 4.07 million. Microsoft puts 2.99 million. JPM puts 1.75 million. And NVIDIA $60 puts 2.91 million. That's over 27 million in just those names alone. And that's not even counting flow in Meta, SAP, and Costco. Institutions are not just protecting, they're positioning at this point. Don't let the indexes fool you. Beneath the surface, there's a war going on. Tech bulls versus macro bears. Short-term pump versus long-term hedge. And the only side that wins, the one reading the tape. Take action. Track the flow, not the headlines. Use IV and volume as your edge, and watch for repeated strikes and timestamps. Where there's smoke, there's institutional fires being made. Smash that like button if this breakdown gave you an edge. Drop your favorite ticker, and I'll break the flow down in the next episode. Stay liquid, stay skeptical, and stay dangerous, my friends. I'll see you in the next episode tomorrow.